Managing Partner with Levinson and Associates. With us today, we have Joseph Loughran, our Marketing Vice President, and then we have our special guest speaker and premium finance expert, Karen Gilmore Buxton from Lincoln Financial. So you're going to hear some great stuff all about premium finance, almost like a premium finance 101, if you will. And, as you know, if you've been with us for a while now, we try to pick out hot new topics, concepts, new products, carriers, anything to help you get your foot in the door and share a new story or maybe uncover some new business to grow your practice. I mean, that's the name of the game. So we try to pick a hot new concept and feature whatever concept that is on these weekly live webinars. And, if you have any ideas or you say, hey, there's a new product that just came out and it's the best thing since sliced bread, we want you to share. If you have an idea, a comment, question, even if it's something negative or positive, anything that has to do with these weekly webinars, please let us know, okay? We know we wouldn't be in this position if it wasn't for our 11,000 agents across the country. Obviously, all of our heads together is better than one, and we get that, so please share any input you have. Also, on our business Facebook page, the Levinson Facebook page, please look at some of the testimonials, some of the comments. If you have anything to share, great. And we constantly post, probably every other day, any new webinars that are upcoming, maybe a new lead program or anything that's new and exciting here at Levinson. We try to put on our business Facebook page. So kind of keep your eyes peeled on there. And it's also a great way to see what's hot and what's not here at Levinson. And then we have a feed that runs live on our homepage of CarrieLevinson.com. So even if you don't like Facebook or you don't believe in it or whatever the case is, when you go to CarrieLevinson.com, bottom right corner, you'll see our live feed right there. So just another way to keep you in the now. Okay, so today's webinar, Premium Finance 101, and we have put together a complete premium finance resources marketing section on our homepage, which we'll show you in a second. We also put together with Karen some great sales ideas. I think most important is you need to know what to look for when it comes to a potential premium finance case. You need to make sure that the age ranges are correct, net worth is correct, the client's health is okay. So we are going to teach you all about what to look for and how do you know when you have a potential prospect for a premium finance case. We even put together a complete checklist that you can download, you can print, or you can use these as mailers, whatever you want to do. But it's so important that you know, hey, you know what? I have a perfect premium finance candidate, and this is the time to get me, Joe, Josh on the phone, and we will get Karen involved if needed. We can run some illustrations. We also have a third-party funding company, okay, that we have an exclusive arrangement with. So you have us as the marketing and support arm. Karen and her team have, in my opinion, one of the best premium finance products. And then we have our third-party funding company. So we have all of your bases covered when it comes to premium finance. And there's been some changes in this part of the industry. So we're going to go over everything today. And the goal is, by the end of today's call, to make sure that you are comfortable with this concept. And if you have one client or you have 10 clients that you think fall into this various criteria that could be a prospect, let us know. These cases on the average are anywhere between $50,000 and $1 million of premium. So the commissions are huge. And all it takes, if you have one client, you land one case, that could make your year or your next 5 years, literally. So, it's important to maintain your day-to-day business and selling term or UL or IUL in a traditional way. But at the same time, keep your eyes open. Again, if you run across a prospect that you think can fall into this, perfect. Pick up the phone, call us. We'll do pretty much everything for you. And again, these are monster cases. So average commissions anywhere from 50 grand all the way up to $1 million or even higher. So, and then Karen will tell you that as well, but these are monsters. Okay, so it's very important you know where everything is, you know what to look for. Those are probably the most important things when entering this market. So what we have done, and like I said earlier, we have this folder that we're constantly adding to, updating, and it's the Premium Finance folder on KerryLevinson.com. If you hover over the marketing tab, it'll say Premium Finance, and then on the left side, you will see all of your options open up, and we have various fact finders. We have that checklist that I was just talking about, different carrier presentations that are meant for agents like you, and then of course there are different presentations that you can use for your clients. If you want to do this on the phone through a webinar, if you want to do face-to-face, if you want to even host a seminar, okay, you can use our Agency Automator tool to drum up prospects to invite to a one-on-one, or even invite 50 to 100 people by giving away our free scholarship to everyone that attends, and talk about premium finance. We have all of the material to do that. So if you're interested, let us know. We can even go as far as customizing pieces with your information. We can do anything you want. Just let any one of our marketing folks know, and we will make sure that you are up to speed. Also, keep in mind, before I introduce Joe here, we have all of the top carriers that play in this market. And it's basically Transamerica, AXA, Allianz, Life of the Southwest, and of course, Lincoln. The reason why we're featuring Lincoln on today's call is, in my opinion, they have the #1 go-to IUL that plays perfectly in this space. And Karen's going to share some of that in just a few more minutes here. So moving forward, Joseph Loughran's going to take it from here. He's going to show you some more of our advanced marketing resources, and of course the Agency Automator, which could be used to drum up various prospects that fall into this space. So Joe will take it from here. Thank you.
Yeah, thanks, Bill. One thing I do want to show real quickly here is the Advanced Marketing Resource page, again, on KerryLevinson.com. This is underneath that same marketing tab. I've actually highlighted it in blue. What's really neat about the website here is, of course, a lot of the premium financing cases are actually sourced from high net worth individuals, and that really ties into the Advanced Marketing Center, whether we're looking at some calculators, some marketing software, whether it's for estate planning. This is a great resource to be able to use. We even have specimen documents. So if you have a buy-sell agreement or a key man policy or split dollar, all those specimen documents are available right through this actual portal. You can go in there and be prepared and have everything you need to actually start that conversation with the client and show them all the different solutions, including premium finance as a tool to actually help them afford more coverage. So that's a great tool. I wanted to be sure that I highlighted that so I can actually show everybody where those resources are, again, right on KerryLevinson.com. Now, Bill mentioned Agency Automator. This is by far one of the best customer relationship management tools, not only for agents that have been in the industry for 5, 10, 15, 20 plus years, but also for agents that are just starting in the industry. So this is the CRM platform, which stands for Customer Relationship Management. This actually helps you run your day-to-day practice, whether it's following up on a client that you sent quotes to 6 months or 3 months ago, or looking at clients that have a conversion that's coming up for a term policy, maybe a annual policy review. The neat thing about this platform, and really how it relates to premium financing clients, is if you have a database of prospects or clients you've been working with for several years, you can actually go through this marketing platform and actually ask the system to show you clients that meet the criteria that are going to be perfect for premium financing. So you can make sure that you're reaching out to those clients, you're making them aware of the premium financing arena, and then actually starting that conversation on premium financing. And that's just one example. It's also a great tool, whether you're selling regular term life or universal life or IUL. There's actually a database of over 1,000 different email campaigns you can choose from. Your information is automatically included, so you can pick different email templates and really set up a drip marketing campaign to keep your name in front of your clients. So one of the easiest, fastest ways to generate some more business is using that CRM platform. There's actually another part of the CRM platform, which I always refer to as the prospecting tool. What we do here for Levinson agents is you have access every single month to 1,000 new prospects. Now you can put in your zip code. You can say, I want to see clients within a 30-mile radius that have an income of $100,000 or more, that are married, inside of this zip code and the mile radius, and it will actually give you a list of 1,000 prospects every single month. You can start doing some email marketing. You can see who opens that email, and then you can access their full profile, which is not only going to have, of course, their contact information, including a phone number and address, but all of their additional information as far as their net worth and income. It's a really, really great way to generate some new activity. This is available at no cost to all active Levinson agents. So a really, really great turnkey system to really start generating some new sales. And of course, kind of mining through your existing client database to find those clients that are perfect for this premium financing scenario that we're going to be covering today.
Okay, thanks, Joe. We just have 2 more slides, and then we're going to have Karen take it from here. So just real quick, the number one question that we get, okay, when we're speaking to agents is leads, okay? What lead programs do you offer? That comes up all the time, and then a close second, of course, is commissions. So with lead programs, if you've been out there for a long time, and even for a short time, you've seen various marketing pieces, you've seen email blasts, different presentations that, hey, we have the best lead program, we have internet leads, we have mortgage mailers, final expense, annuities, whatever the case is. And we all know probably 95% or more are all bogus, okay? And I know that for a fact because we have tried, I would say 10 to 15 various companies by now, and it is so difficult to find that perfect lead program. And I think if there was a perfect lead program, I think we'd all be selling life insurance, driving around in Rolls-Royce limousines, okay? But the fact is that doesn't exist. So in my opinion, if we can find a company that provides good leads, they're never going to be perfect. So if they're good leads, okay, and you can uncover, say, 2 to 3 sales out of every, let's say, 14 or 13 leads, you're doing great. And obviously, those sales could be $20 a month, or they could be as high as a couple $1,000s a month, which we've just had in the last couple of weeks here. So the point is, with our mortgage protection mailer program that's exclusive to Levinson, the program works. The pricing is great, and we are averaging 2 to 3 sales for every batch. That's huge. Okay, we've had that program. It's been about 4 years now. We started with just a couple of agents, and we're now up to, we'll close out 2017 with $1 million of lead sales. And keep in mind, we're not even a lead company. We don't make any money on the program. It actually costs us money for you to participate. We just make it available to our agents, and we're going to be at almost $1 million of lead sales this year. That is crazy. I can't believe it myself. Okay, and that's not even our business. We don't market it. Obviously, we provide it as a service, but we're not the lead company. So that, in my opinion, is the proof in the pudding. The program works. So what we've also done is we teamed up with another third-party company, put a exclusive contract together. We've done our due diligence, and what we're doing, we're launching for the first time ever in Levinson history since 1972. We're coming out with a live transfer lead program. It's going to be about probably another 10 days or so before we officially launch this. But what's so neat about this, first of all, the leads are going to range from $30 to $40 per lead. But the difference is these leads are warm, live transfers. Okay, so let's say you log into the system and you say, okay, I want to be on call from 1 to 5 p.m. today. They are going to call you with the client on the phone. They've already been pre-screened. They are ready to talk about life insurance. Okay, you can either choose from term insurance, final expense, mortgage protection, but they are ready to go. And if the client is not ready to go or they're not qualified, you don't pay for that lead, and everything is recorded. So there's no BS here where, let's say you're talking to a 90-year-old client who can't qualify for a policy, you don't pay for that lead. So these are all pre-qualified, ready to go. Now, the neat thing is, for every Levinson agent that signs up, you're going to get a $200 credit, okay, with your first batch. Okay, so right there, that's about 6 to 7 free leads. And the way it works, if you're, let's say, working in South Florida, and you say, okay, I only want to work in these 3 counties, okay, the lead cost is going to go up to closer to that $40 range. If you say, hey, you know what, I'm great selling over the phone, I'm going to work the whole state of Florida, that's where you're going to get the most bang for your buck, and the lead cost will be the least. Okay, but the great thing about it is, obviously, you're going to get more bang for your buck, but you're selling over the phone, you're using eApps, Drop Ticket, and our exclusive turnkey platform. So in my opinion, if I were out there selling, I would pick some of these Midwestern areas, okay, where, let's say, it's not as saturated as a South Florida or Texas or California, and I think that's where you're really going to shine with this warm live lead transfer program. But definitely keep your eyes peeled. We're going to send out an invite in the next probably week to 10 days, and it will give you all of the information so you could be on the first official rollout webinar, and you'll have that $200 credit for everybody that signs up. And again, this is an exclusive co-op program only available through Levinson. So great stuff to come. As you know, we don't stop here. We are constantly coming out with new technology, CRM tools, lead programs, anything to help our agents get their foot in the door and share their story over and over again, because when that doesn't happen, obviously sales are not made, and we get that. Okay, so our last slide here before we dive into our feature presentation is our upcoming agent training events. Very, very important. I know everybody doesn't have much time. Your time is valuable. We don't have 5-10 minutes throughout the day, but these things are very important, because if you're not comfortable in training with some of these programs, you're never going to have your arms wrapped around some of this cool technology, lead programs, or products. So very important here. So if you want to jot this down, the Agency Automator, which is your CRM tool, and this will help you generate 1,000 new prospects every month, let's say for premium finance, mortgage protection, senior market, final expense, anything, okay? In my opinion, if you're not using a CRM tool or the Agency Automator these days, you're falling behind. Okay, you need to be out there. You have to have these touches going on every day, literally. These clients and prospects should see at least an email blast or newsletter from you. I would say at least weekly or a few times a month, so when the life insurance or long-term care need or annuity need comes up, they remember Bill Levinson. Hey, I remember his picture in those weekly email blasts that I can't stand. Because when the time comes, they're going to remember your name, your face. So real important, Agency Automator, every Tuesday and Thursday we have live trainings, 2 p.m. Eastern. Then we have the Agency Automator Plus. That's the same exact thing, but it's used to recruit agents. So instead of going out there and marketing to 1,000 new prospects, you're going to speak and market to licensed agents across the country. That's used to build your own downline and obviously make overrides and bonus on any of your downline's production. brand new rollout here. Emeritus has been around for a long time, but they are rolling out their brand new division on the brokerage side. They have an awesome term with built-in living benefits product. They have a non-med up to 300,000 e-applications, some awesome new products. The first day this will be available to the public is Monday, this Monday on the 7th, and we're going to have a webinar launching Emeritus and these great new products, 2 p.m. Eastern Time on Monday. As you know, we normally don't host webinars on Mondays or Tuesdays, but this is important enough that we think our agents need to be on this call. They have some great new products. Commissions are awesome, by the way. So I think you will love that webinar. Time well spent, in my opinion. On the bottom, we're having our third-party tech company that hosts our free agent websites. He is actually going to host the first time ever a live webinar training all about our turnkey agent website platform, our search engine optimization options, our social media integration options, basically everything tech related that is, we actually built this platform for you to take advantage of at no charge. We're going to go over everything on Thursday. That's next week on the 10th, 2 p.m. Eastern Time. Don't miss that one as well. And if you have any extra time at night or in the morning or on the weekends, go to KerryLevinson.com. See bottom right corner there. We have over 200 on-demand videos. If you want to brush up on our scholarship platform or premium finance or mortgage protection, anything that you want to get trained on or brush up on, check out our YouTube channel. Everything is available through our website at no charge for all Levinson agents. Okay, I know I had a lot to go over there, so without further ado, we're going to jump into our feature presentation today. Now, Karen was actually speaking at our expo, so if you were in South Florida at our Agent Expo, you probably met her. She spoke towards the end of the day. She is awesome when it comes to premium finance, advanced case design, and sales. So without further ado, we have Karen Gilmore Buxton, our CLU from Lincoln Financial. Karen, welcome.
Bill, thank you so much. I appreciate that introduction and the opportunity to spend some time with all of you today. And I definitely appreciate the partnership with Levinson and Associates for sure. I work in the Concord, New Hampshire office. I'm a member of the advanced sales team and point person for premium finance case design. So I do get an opportunity to see all kinds of premium finance cases. And today, over the next 15 minutes or so, before I jump into a couple of case studies, because I do want to show you a case we've placed and another we're working on, I want to just touch on a few of the best practices and guidelines in terms of premium financing with Lincoln. And our goal is that you walk away with not only a better understanding of premium financing with Lincoln, but overall, as well as opportunities in your business for premium financing. For Lincoln specifically, our premium finance sales make up about 20% of all of our IUL sales. So, you know, as Bill mentioned, some of these cases can be extremely large. We definitely have had the $1 million target premium cases. The average is around $400,000 for target premium on our premium finance cases. So it's a significant part of our business. And it's important to us that we make this process as seamless and as transparent as possible, and that we generate quality business. We want cases that are going to be successful in the long term, not just the big wins, but you know, cases that are actually conservatively run, you know, the right clients. So that's why I wanted to touch on some of our guidelines first. We have competitive products that work in this market. We have a couple of products that I'm going to share today. One has 100% return of premium for the first 10 years. Our lenders that we work with like that, our clients like that, knowing that you know, they don't have to worry about posting collateral because we have 100% return of premium. And we have a team of people that are focused on premium finance. I'm focused on the case design aspect. We have an individual that works with our underwriters and assisting with the financial aspect and whether or not it's a viable premium finance case. So I'd like to jump in, and we have this easy checklist to kind of right off the bat determine if it makes sense for this client to do premium financing with Lincoln. So the first question we'll ask is the loan arrangement for a term of less than 3 years? If it's they're borrowing for a year or two, that wouldn't satisfy our criteria for a premium finance case. Usually the loans are anywhere from 7 to 10 years. Is the loan arrangement less than 100% fully secured? Is the next question. So the lenders require collateral. Lincoln requires that there's collateral, whether it be the cash value in the contract, which we'll talk about in a little bit, or the client can post their own collateral with their own assets, but it has to be fully secured. And in terms of accruing loan interest, you may have heard those stories about premium finance cases that are labeled as free insurance. Client doesn't have to pay interest. They don't have to pay premiums. They just borrow the money, and the interest accumulates, and all this cash value is going to grow, and they can pay back the lender someday with zero out-of-pocket expense. And we don't allow those types of designs. We think they're unrealistic and extremely risky. So we do require that the policy owner does pay loan interest, so they're part of the process. And the last question is, if the insured is not a U.S. citizen. If they're not a U.S. citizen, then we will not be able to offer premium finance coverage. So those are the things we don't like to see. I want to touch on what we do accept for business. Before we do, in bold red on this slide, it indicates non-recourse premium financing is prohibited. And what that means is, if the client, non-recourse means that the lender can only get assets from take cash from the assets that they're borrowing for. So for example, you're borrowing for the premiums on a life insurance policy, so the lender can only go after that asset, the life insurance, to pay back the loan. That's a non-recourse premium finance, and we don't allow that. Recourse premium financing means they can attack other assets, other assets that the client owns other than life insurance policies. So that's our rule there. What kind of business do we like? We like clients that are over the age of 50 to have net worth of $5 million or more. If they're under the age of 50, we'll accept net worth of $2.5 million or more, and income of $250,000 a year, all ages. We just want to test that the client could pay the minimum premium to keep that policy in force, that they make enough money, they have enough liquid assets to pay that minimum premium. And that's on our illustrations, what that minimum premium is. But that's one of the things that we want to make sure that if they no longer take the loan to pay the premium, that they'll be able to pay for the policy themselves. I mentioned that we don't accrue interest. The client has to pay that interest out of pocket, and that the arrangement must be more than 3 years. The last requirement is the exit strategy. So run hundreds of illustrations, and I would say over 95% of the time, what I'm asked to show is the lender being paid back with cash values in the policy. So for example, you pay the premiums for 10 years, and then in year 15, you borrow or take a loan out of the cash value and pay back the lender. So the lender's paid in full, and now you own the insurance outright. That's an exit strategy. Another would be the client's going to have a liquidity event. They're going to sell property or whatever, and they're going to use those monies to pay back the lender. So that's also a well-defined exit strategy. What we don't like is if the client says, we'll just pay back the loan when I die out of the death benefit. So we don't allow death benefit as an exit strategy. That wouldn't be a good way to go. A couple other quick things. A minimum face amount of $2 million is what we like to see. We don't allow our table reduction program. We have a table C to standard program that's not allowed with premium financing over the age of 60. And MEC cases are evaluated on a case-by-case basis. And the reason why we really want to look at those closely and make sure the policy owner understands the repercussions there is when you have a premium finance case that's a MEC, and the policy is collaterally assigned to the bank, any policy that has a collateral assignment on it, if it's a MEC, is going to receive a 1099 on any growth in the policy. So IUL products, which is all of the premium finance cases we've ever done, have been indexed UL. They tend to grow cash value, and that would definitely generate a 1099 to the policy owner each year because it's collaterally assigned. So we always want to make sure the policy owner understands that, and they have to sign a disclosure indicating they understand that. So that's it for all the rules and guidelines. Want to share just a moment on what we're seeing in terms of typical clients. So in the last 18 months, what kind of cases are we getting in here? The average age is about 54, and the average death benefit is just under 10 million. The product of choice for most of our premium finance cases is our accumulator with the exec rider. And I mentioned the exec rider earlier. That's 100% return of premium in the first 10 years. As far as how long they take loans or the funding level, it's usually anywhere from 7 to 10 years, although I have to say most cases I see are 10 pays. So you borrow from the bank for 10 years, max fund the contract, max non-max, so that you're able to generate enough cash value early enough to pay back that lender. That's the goal. So that's why we're max funding, so we can take a loan or withdrawal fairly early and pay back that lender. Other opportunities we've seen, and lots lately, on husbands and wives survivorship cases being premium finance. You know, on a survivorship case, the costs tend to be much lower because you're insuring two people. So those tend to work really well in premium finance cases. We do see a lot of business cases. We had a multi-life premium finance, I want to say last year, I think there were 45 lives. I mentioned earlier $2 million minimum death benefit, but if you have more than one life, it's a part of a group. You don't have to have that $2 million on each individual. It just has to be cumulative. Obviously, ultra high net worth. That's what this is all about. We're working with the ultra high net worth individuals. They just want to make better economic use of their money, and they'd rather pay the loan interest out of pocket and use their other assets in other ways to generate a better return for them. So that was the guidelines and best practices in a nutshell. Now I want to switch gears and share a case that was placed with Lincoln last year, and then a case where I'm working on now. This first case is on, we'll call him James. He's 50, owns a trucking company, and he wants to create a plan not just for death benefit coverage, but he wants to supplement his retirement, and he wants to retire at the age of 62 in 12 years. So for this case, he needed $10 million in death benefit. He needed to have some estate planning, but he also wanted to do some retirement planning. But he doesn't have the cash to pay those premiums. So he worked with his advisor, and this is the case we placed, to borrow from a lender. He wanted to make sure that we had a high early cash value rider on there because he didn't want to use his own assets for collateral. He wanted to pay the loan interest every year and repay the lender out of the policy cash values. And then after he pays the lender, he wanted to use the cash values to supplement his retirement income. So let's get into the specifics. This case, it was an annual premium of $572,000 for 8 years. And at that time, the loan interest rate that was used, this is for the lender, was 4.5%. That, for over an 8-year period, bought a $10 million IUL accumulator product with the exec rider added. Now, we max funded this. That's why it's such a large premium. We wanted to max non-MEC fund the contract. In this example, you borrow the premium from the lender of $571,976. So what's the surrender value in the end of the first year? Well, it's the same. It's a guaranteed surrender value equaling the premiums, and therefore he doesn't have to post collateral. You fast forward 8 years, add up those 8 premiums, he borrowed $4.5 million, and his guaranteed surrender value is $4.5 million. Now, if you think about this case, and again, this was one that we did place last year. If you think about this, if he goes a few years into the contract and he just did not get the performance he expected, he's got the exec rider on there. He can cancel the policy, pay the lender, and not have to worry about any additional out-of-pocket costs there. He can, for the first 10 years, figure out if things are going the way he'd planned. He's going to pay interest each year. That's the only out-of-pocket that he has to pay. In this example, at 4.5%, that first borrowed premium, $572, it generates interest of $26,000. He borrows again in year 2, so now he's got a loan of $1.1 million. So his interest is going to be more the next year, $51,000. And then if you look all the way to the end of the first 10 years, The total interest he's paid out of pocket for the $10 million policy is $1.3 million. That's his interest expense. His goal is to repay the lender in year 11. We were able to do that with a 7% interest crediting rate. And I want to stop for a second and talk about that. The Life Reserve IUL accumulator product with Lincoln has a 11.5% cap and a 1% guaranteed floor. The AG 49 look-back rate or default illustration rate is 7.33. So most of those illustrations are run at 7. Now, I also, for every premium finance case that I look at or illustrate, I stress test it at lower interest rates because I want to make sure if they don't get 7 or 6.5, that their policy will still work. And in this example, I ran it at 6%. And at 6%, they could still pay back the lender and the policy would stay in force all years, but they'd have to wait till year 13 to pay back the lender. So that's something that they would know in advance. If you don't get 7, let's say you get 6, you might have to wait a little bit longer to take that loan to pay back the lender. So just be aware that it's a really good idea to stress test these at lower rates as well. So he paid back the lender at year 11. In year 12 is when he wants to start taking supplemental retirement distributions. So we illustrated being able to borrow $71,000 a year for 30 years, starting at in year 12, and the total loans taken by age 91 are $2 million, and the death benefit at that point is $5.7 million. I stress tested these as well. I wanted to know, could he take income if he only got 6% on this? And he could. He could take $68,000. By the way, if you sell IUL and you're thinking about, I wonder if that 11.5 cap is sustainable. I wonder if Lincoln's going to reduce that to 11 or 10. The look-back rate for a 9.5 cap is 6.39. That's why I feel comfortable with a 6% rate as far as stress testing it. So at 6%, they could still pay back the loan and still take distributions of $68,000 all years, and the policy would not lapse. Now, of course, if they only got 1%, which is the floor every single year, the policy would lapse in year 11, and they could only take a loan of $3.4 million, which is less than the $4.7 they owed the bank. But like I said, if you're in year 10 and you see that you've gotten 1% every year, probably should cancel the policy and get that guaranteed return of premium, pay back the lender in full. In summary, this was an 8-pay of $572,000 at 4.5% interest. You got a $10 million accumulator with the exec rider, so no collateral was required. Out of pocket for James was $1.3 million. That's all he paid. He got a $4.6 million to pay back the lender and was able to borrow each year for 30 years and still have a remaining death benefit of just over $5 million. That's our IUL accumulator exec product. That's our most popular single life IUL, and it's because of that exec rider and the guaranteed 1% floor. In terms of what tools we have in order to demonstrate if premium financing even makes sense, I run a lot of these designs, and I just use our commercial premium finance sales concept in our software. Tells me whether or not the design even makes sense on one specific page. So what I'm going to do now is share a quick, much quicker than the one that I just shared, survivorship premium finance case that are in the works right now, and show you what that would look like on the premium finance values page, because I think it can be more understandable if you can see the columns. So for this example, the one I'm working on now is a 65-year-old and a 60-year-old. They also want a $10 million death benefit. This was a 10-pay, worked better at a 10-pay than a 8-pay. And I'm assuming a little higher loan interest rate. The other one was sold last year. This one, I just went a little bit higher. I started at 5. That's for the lender, by the way. The way that I designed it is they paid back the loan in year 15 with a withdrawal. So for the accumulator, I used a loan. For this one, I did a withdrawal, worked better. And again, the out-of-pocket expense is $3.2 million for that $10 million death benefit for this case. So this is where I think it's helpful to see the numbers. This is our premium finance values page. This is what helps me determine, does it even make sense for this client based on their age and the design. So what you're looking at, I'll zoom in on some columns here, is first of all the lender rate. I started out at 5%, and I increased by 10 basis points and leveled off at 6. Again, I want to put a little cushion. I want to be a little conservative about what could happen. So that's the lender rate. That lender rate is then multiplied by the total loan each year, and that's what the policy owner would have to pay for loan interest each year to the lender. If I add up all those loan interest payments, it comes to $3.5 million by year 15, and that $3.5 million out of pocket buys that $10 million death benefit, plus generates enough cash value to take a withdrawal from the policy and pay back the lender. So that was the client's goal. They wanted $10 million. They wanted to pay less out of pocket for that $10 million in coverage. So this was the design that they like to see. Now, what's different about this versus the exec is the collateral required. This is a survivorship IUL, and it doesn't have the exec rider. So in this example, they'll have to post their own collateral with their own assets to back this loan. That may or may not be a deal breaker. For this client, it wasn't. They had enough collateral to back it. That was the premium finance values page. I also like to draw your attention to the summary of values page in the illustration. This is in all of our illustrations. It has guaranteed charges column at the guaranteed floor of 1, and then it has current charges at 1, and then current charges at the 6.5 that I used here. If you look at on the far left is the absolute worst case scenario. So if Lincoln increased the charges in the contract to their guaranteed levels right away, and S&P never did better than 1, then that's the worst case scenario. So what you see here is, even at the worst case scenario, the client could take a withdrawal for $4.6 million and pay back that reduce that $5.8 million loan. If they got 1% in current charges, if Lincoln didn't increase charges on this IUL contract, they could borrow over 90%, not borrow, but withdraw over 90% of what they need to pay that loan back. So the reason I am drawing your attention to this is the power of that 1% floor and the expenses in the SIUL contract really help put a client's mind at ease in terms of the ability to access enough cash to pay back the lender in these cases, because we're stress testing at such low rates. Speaking of stress testing, this one last page before I close is also available in our software. And I don't have to go in there and run this illustration at a bunch of different rates. It does it for me. And I wanted to know at what rate, what's the lowest rate that would get this policy to last until life expectancy after paying back the lender with that withdrawal in year 15. What's the lowest rate that would keep this going until life expectancy? And it was 5%. Life expectancy was the youngest insured, age 91, and 5% got me there, with that withdrawal and keeping that policy enforced to that point. So I love that report because, again, I always stress test these and make sure that they're not going to fail in terms of the crediting rate and the loan rate and things like that. So I just want to close with, again, I appreciate so much the partnership with Levinson, and we are here to support Levinson and all of you with anything you need with premium financing from A to Z. And I'm going to turn it back over to Bill and Joe for closing remarks.
Yeah, thank you so much. Great job, Karen. Also, what we're going to do is everybody on the call will get an email from us, and we'll include some great fact finders, the checklist, some good brochures, and please, and even if, it sounds like a lot and it's a little overwhelming, if you feel like you might have someone that could be perfect for this, okay, or just from your gut tells you, hey, you know what, my buddy Steven or Lisa could fit in perfect to this premium finance category, pick up the phone, let us know. If we have to get Karen involved, we can. If we need our third-party funding relationship, we can get them on the call as well. So we can do every single thing. As long as you have the prospect, we'll do all of the work behind the scenes for you, okay? And we have all the relationships to get this done. So everything will be included in that email. And again, pick up the phone, call us anytime for any question. There's no dumb question, or if something doesn't make sense to you, it's fine. Pick up the phone, call us, we'll hold your hand and make sure you're comfortable. Okay, with that said, I appreciate everybody taking the time. Special thank you to Karen and Joe for joining us and helping us host today's call. We're going to end with this. We have our Positive Tuesday quote that I put together. This is also, again, on our business Facebook page, and you'll see it on our website. I try to come up with something new and creative every week. It's so important. I don't care if you're working the term market, if you're knocking on doors selling final expense, or if you're working these $1 million premium finance deals. You must be in the right place day in and day out. Look the part, sound the part, okay? You got to feel it, because whatever your energy is and wherever your head is at that time, if it's on the phone or face-to-face, your client is going to feel that, okay? Especially you're selling a monster case like this, but you got to be in the right mindset. So I don't care if it's Temple, Church, Tony Robbins, motivational CDs, if it's The Secret, anything. Read your book, listen to your CD, get in that right mindset, be successful, okay? And even if you're not quite there yet, that's okay, because if you act like that and you think it, it's going to happen. So we'll end with this. Don't lower your standards to match your reality. Upgrade your faith to match your destiny. With that said, have a great weekend, a great following week. Good selling. Thanks again, and take care.